So why invest in real estate if you can put money in the bank and make 5%? Good question. Now, I've been dealing with this a lot this year. My name is Steve with Infinity Investments. I run a brokerage firm and we also do syndication. So why, the question I get asked, why would I buy this piece of property when I can put my money in Chase Bank in a CD or money market and get 5%? I haven't been able to get 5% in the bank since 19 blah, blah, blah. And so look, this is something that as a person in the business, I had to sit back and do some research and think about, well, all right, why would somebody, what are the reasons that you would want to invest in real estate? I'm talking about investing. Buying a home is obviously going to live in it, so it's probably cheaper than renting it, at least in the Bay Area. But you know the benefits of buying a home. We're talking about investments. Why would you invest in real estate where the cap rates right now are lower than the interest rates, and you can put your money in the bank and they're going to pay you 5%, at least? All right, so that's a valid objection. So let's unpack that for a minute. All right, point number one. You put money in the bank at 5%. Now, I listened to a presentation. There is a very, very, I don't want to say just more popular, but also established multifamily investor and syndicator, podcaster, authority in the world of multifamily. His name is Neil Bawa. I listened to one of his talks and it kind of opened my eyes up because he was talking about if you're earning 5% in the bank, you're still losing money. And he broke down as to why that is because of the rate of inflation that we're in is still higher than that 5%. Real inflation, like, when you're buying properties and you're buying cars and groceries and all that stuff, is probably more than 5% right now. So you're still losing, right? But outside of that, no, the first reason why you would want to invest in real estate as opposed to just keeping money in the bank. Now, money in the bank is money in the bank, but as an investment, right? We're talking people putting money in the bank as an investment. First of all, in real estate, we get income. That's one measure of return. We also get this thing called appreciation, growth over time, right? And if you put your money in the bank and you say, I'm just gonna be a saver, I'm just gonna get this 5%, you're gonna get this 5%, but you're probably gonna be losing out to inflation. But what you're not gonna get is you're not gonna get growth. You're not gonna get growth, all right? At the end of the day, you ain't getting no growth. Not with money in the bank. So you might invest in stocks, you might get that. But we just talk about real estate versus money in the bank, because that's the issue that we're up against right now. All right, so growth over time. Now, I don't care if you're in the middle of nowhere, Midwest, right, where there is not a lot of appreciation. Your property's still going to appreciate higher than if you just left the money in the bank for 10 years. So you have to think and consider that, and especially right now where you can negotiate. You can negotiate in general, depending on where your market is, but certainly here in the Bay Area, certainly here in NorCal, most markets you can then negotiate if you're buying an apartment building, if you're buying an office building, if you're buying any other kind of real estate, just in general, you can negotiate to get a deal off of its market price. You might not be able to steal it, but you can definitely get a discount. I can tell you in the Bay Area, I'm seeing some good discounts right now. So number one is you don't get growth, right, with your money in the money market or CD, right? We get growth in the real estate world. Number two, from a tax standpoint, what are the tax benefits of just keeping your money in the bank? And if somebody knows better than me, put it in the comments what those tax benefits are. And I'm sure there's some kind of account that you can do. We're just talking about throwing money in a CD, JP Morgan Chase, or whoever, right? How does that tax situation work? In the real estate world, in the investment business, we get this thing called depreciation. And it works out real nice in terms of helping you out with your tax liability, right? And so that's another big reason why you would want to invest in real estate. Whereas you're probably not getting, last time I checked, money in the bank don't get depreciation. Now, that is unless your bank go out of business. That's another thing you got to think about. That's another thing. I'm not even touching that today. Silicon Valley Bank, First Republic, so on and so forth. But you're not going to get a depreciation write-off from your money in the bank. Whereas in investing in real estate, that's what we got going for us right there. We got money in the bank is not going to give you a depreciation write-off that you could get from your investment real estate. All right, so that's my second point as to why you should invest versus keep money in the bank. All right, third thing is this. I think this gets overlooked a lot in real estate. All right, principal pay down. Okay, so you get the depreciation write-off and all of that, but every time you're making a mortgage payment, if it's not interest only, as long as it's amortized, it is paying down your mortgage. You are earning equity. Even if the market is crap, in general, if it's not going up, but you're paying down that debt and you get principal pay down. If you hold real estate long enough, you're gonna really benefit that. The first 5 years are really front loaded for interest, but as I've learned and grown as I get older. 5 to 10 years, that principal pay down really starts to accelerate. 10 years and beyond, I mean, it really starts to flip. Almost the majority of your payment begins to be principal. So if we're looking at the long-term perspective, it still makes sense to invest in real estate today. And in fact, it makes a lot of sense, the most sense to invest today, because wouldn't it be better to buy something when it's on sale? Wouldn't it be better to buy something that you can negotiate with versus having to beat out Alibaba and the 40 Thieves, right? When it's a hot market, you got to wrestle with people. Even if you got 3% interest rate, you probably overpaid to get the property and stress yourself out versus, hey, I can negotiate now. I can get a good deal. I can get all the benefits we talked about of owning real estate, which has historically over the last thousands of years worked out better than just keeping money in the bank. So I hope this is helpful. I hope it gives some perspective as to what's going on out there and why real estate still is the best investment and why you should still be making investments in and looking for deals today, August 2023. Thanks a lot. To the next video. Deuces.